Here, always excited to be here, especially when it's with Carl Dakin, who is what I consider a real thought leader and mover and shaker in the funding area that really is very diverse and interesting. And it's not just maybe what most people think it is or what it was. So, this gives us an opportunity to really expose a lot of what's going on and do it in a way that everybody can see value and benefit from, hopefully, get some quality takeaways. Chat is wide open. We always depend very much on chat to direct us, make us as relevant as we can and focused. Just as a focus point, we've aligned due diligence today as a term and subject matter that some people are probably more familiar with than others, but it's very essential in the financing realm and really in everyday life, depending on who you're qualifying and wanting to work with. So, with that said, I'll turn it over to Carl, and Carl can start off with a little bit of update onto what's new and exciting in Carl's world and first thoughts on due diligence. Carl?
Thank you, Don. Thanks for having me as a guest on your show. For those of you who don't know me, I basically consult with small businesses and community organizations on designing, staging, and conducting capital campaigns. And pretty much anything under the sun, any type of funding from any particular source are all fair game because it's not so much how you raise the money. It's about being successful in raising the money, but how you raise the money directly applies to your probability of success. And one of the keys to that is due diligence, which I'm going to define expansively here as collecting, analyzing, and using all the information you need for any particular capital campaign. Too many times, small businesses kind of take a stance of everybody's an investor candidate. I should talk to everybody, and all good things will come from that. But my 45 years of experience in working with hundreds of campaigns has taught me, however painfully, that that isn't the way it works best. You have to figure out who cares, why they care, do they care enough to make an investment or a contribution or help you out, even if they don't understand or really like the investment opportunity, because they have a reason, they have a motivation to do something. And so I always start off my due diligence trying to figure out who cares, how much they care, who cares more than the next person. Because at the end of the day, I don't have all the time and money to go out and talk to everyone. That's simply unrealistic, and it distracts from me doing my regular business if I'm out chasing money. So that's where I start, and then from there we get into trying to make sure we understand the entire process. Who's going to be involved? Am I going to use outside resources, contractors to make things happen? Are they dependable? And then I want my plan B so that if the first plan doesn't work, I automatically shift to plan B. I don't stop and have to start over from scratch. And these are all things that every business has to deal with. And in funding campaigns in particular, they may be far more important than they may be even in day-to-day operations.
Well, that's great. And, based on all your experience, what are the challenges and opportunities in quality due diligence? And I know it's a two-way street because you're trying to do due diligence on who your investment group might be, assuming that you can narrow it down to a quality number, and the investment group or opportunity is doing their due diligence on you. So what's important from both sides?
Yeah, The thing is that you have to recognize when you're raising funding for anything that everyone else in the world is your competitor. That your biggest challenge, actually, biggest competitor is not a specific person or business or something else. It's the possibility that the person holding the money decides to do nothing. And they have a whole bunch of good reasons not to do something. They may want to use the money for something else. They may be spooked about how crazy the capital market is today, for all kinds of different reasons, from politics to foreign wars to inflation and interest rates. And then if they decide that they still want to put their money to work, then everyone who wants to dip into that same limited pool of money, you're competing against them, and you've got to find out as best you can what's in the head of the person you're talking to, and sometimes that person doesn't even know why they do what they do or how they do it, and you have to then look at patterns of conduct, their relationship with other people, other indicia or things, and now it looks like a murder mystery movie or like some kind of military intelligence spy movie where you're collecting all this information so that you can make a decision. Should I even talk to this person? And if I do talk to them, what do they need to hear? Because if I just talk about me, I'm going to turn them off. It's like listening to an advertisement. The brain will automatically move to the next subject, skip over everything that's on the TV or radio or whatever else, and pay attention to something else. So I have to be able to talk to somebody about who they are, what they're interested in, and so I need to start the conversation with how I think I can be of value to them, how I can support them, contribute to what they're doing or something they care about. And if I can do that, then we'll have a good conversation. I may still not get whatever I wanted to come into the conversation for, but I'm building a relationship which may become a resource or a go-to place for a later campaign or a later conversation.
Okay, well, that makes sense. So, where do people go wrong when they're providing information to support someone's due diligence? Is it organization as far as good record keeping, full disclosure, staging it? At what point do you provide whatever it is? And I guess there is a fine line between overwhelming somebody, especially if it's excessive detail that people really should already have a pretty good knowledge of, or really coming up kind of short and creating more questions as to how come these answers are yes, no, or don't really align with what the desire is.
Well, as we've talked about, there's two sets of due diligence. There's the due diligence of yourself, of your organization, who you are, what your goals are, all those kinds of things, which is a person who you're talking to will want to know some of this, but not necessarily all of it. And certainly you don't want to overwhelm them out of the gate with something until you can verify that there is a legitimate interest, because you're back into, you're making a blind pitch, you're talking about yourself, you're going to cause that person to run away as quickly as possible. At the same time, the person you're talking to, you have to understand them, because we're talking about building a link where these two fit together, and hopefully they fit together very well enough that there will be an action somewhere in this ongoing conversation to have money or resources change hands. So I think that, from the standpoint of a small business or community project that's looking to raise funding, they really want to have an outcome. This is the goal. This is how their own success, and it has to be as clear and crystal as can be, so that if they hit it, everybody's in agreement that they hit it. And if they didn't hit it, everybody's in agreement they didn't hit it. Anything vaguer than that is generally not going to be acceptable because it reflects badly on whether the project's well planned and designed, and does the person leading the project know what they're doing. And every one of these results in a hesitation or a reason to choose somebody else who is more clear, more capable of communicating where they're going to go. And this goal is where the person you're talking to gets to participate in the end of the story. So if you're going to improve a community, one thing. If you're going to make a lot of money, it's another thing. But they're going to participate because they contributed to making this happen with their resources. So they want to know what is going to be the yield or outcome, and that's where you want to start the conversation, because that's where they benefit. It's not on the front end where you're asking for something. It's on the back end when the story's over. Where do you share the rewards? Who gets the rewards? How much do they get? And all these are the first thing in a very simple one sentence kind of a statement. Hey, we're going to be doing this, and I think you're going to get this out of it. Okay. Anything more than that is too much, because if they go, I don't care about that, then you can skip to the next person.
Yeah, I think you make a great point, because at the end of the day, due diligence is really just communication. It's in a different format, but it's really sharing and learning. And sometimes in order to answer a question, you have to have a question about the question, right? So people will say something and you'll say, well, could you better define that or focus on that, and really be more relevant, as opposed to going off on a wild goose chase or just throwing spaghetti against the wall and hoping some of it sticks. And I guess it's also the basis and the foundation for your future communication and relationship, right? So if someone's stubborn or very holds their card close to their vest, it's also going to be let's say, a reflection on how they're going to continue to be open in the future. And, doing just enough doesn't do enough for either party at a certain point, right? Because I think you make another excellent point, is that people want to know how much you know about what you say you know, based on what you're about to do. And if you haven't figured a lot of that out, it lends itself for a little bit of more questions or confusion. Or at the end of the day, I believe due diligence is all about building confidence, right? That, hey, I can check this off, I can check this off, or there's going to be some remedial attention that's going to have to be necessary to fill in the gaps. With that, Harvey's here. Harvey's here even when he's not here in spirit. He's an inspiration for all of us. Has the franchise show on Tuesdays. Also want to share that Carl has his show on Tuesdays preceding this show. And it's all about instant funding and relates to that, or funding in general. Harvey also has launched his second show on Thursdays, which focuses on the franchisor and their brand story, and gives them an opportunity to share how they started, what they're about, and all those valuable elements. And I think, it is about exposure and disclosure. And the more you can learn, the more you can share, and the more you can become is just terrific. With that said, we've got Dennis here. I know comments were a little late. I saw that we were getting comments, but they weren't showing up. So sometimes there's a time lag, but always great to see Dennis. Agree, stay open, to be open-minded. Dennis actually has been in business 49 years in Colorado, and was saying a couple weeks ago he's thinking about selling his business now. And Carl may be a good resource if you're looking for some insight or how you can be helped. And I think that's the key to these shows and these groups, is the ability to get to know each other. Everybody's been able to do their due diligence on everybody slowly over time, based on every show, based on every comment, to get comfortable. And I think due diligence brings that proper comfort level when it's done properly, and when it's shared with a, positive spirit, instead of just give them only what they need. It's not like a deposition, right? Where someone asks you a question, and the answer should be directly to the question, and not start just volunteering and going off and just being thoughtful in your words. But also, like I say, having that question answered back and forth. What did you mean by this? Was this sufficient? Would you like something different, something more? Because what you don't want to find is the answer is no, because we weren't satisfied with our due diligence search. And maybe some of that could have been benefited by better understanding of everybody's interest, not being irrelevant when you think you know something the other person should know. It's and that's what makes it so important to have somebody like Carl, who has had that experience and that knowledge of how to work with people. And that's why you bring in a guide and you bring in a facilitator or intermediary, so you can kind of soften both ends for each other, and in essence working on both behalf to make a deal happen. So Carl, in the past, what surprised you up and down when it related to due diligence?
The surprises are typically not pretty, meaning that if you're finding something out that you didn't expect, it's probably bad news. It may be, working with small businesses, we may find that, their books and records may not be very good. It may take days, if not weeks, maybe even months, to get everything cleaned up to a level that meets regulatory standards. Worse yet, we might find out that they just failed to pay taxes, and now we have a whole new story, and we have to take them off the board, so to speak, because that kind of potential liability makes them unqualified to go out and raise funding along the path. It's other surprises is finding out that one of the people on the team is a bad actor. This is a term used in the capital market and regulations to refer to someone who's done something bad in the past that's criminal in nature. And again, it may either completely disqualify that small business from raising funding, or it raises all kinds of questions that no investor wants to hope that maybe this person has repented and they're going to do the right thing this time. So those are the two kinds of surprises that are on the downside. Occasionally you'll get a company that brings you something that on its face sounds like it's okay. It may have a new tech or something, but it doesn't excite you when you first see it. And then as you get to learn more about the products and services, you find out that the company may have a whale by the tail, that this is actually a great possibility. And then your concern is, can this company grow and match the scale of the opportunity, or are we up against some other issues that come in at that time? But those are the good surprises, because presumably we can figure out how to work our way up and scale to whatever size the business needs to grow to, whether it's directly, internally, or by licensing or partnering, or some other approach. But you hate surprises in due diligence. You actually want to be at a point where in your first contact, even your first contact is the last stage of your due diligence, because you're putting a hypothesis in front of an investor candidate saying, I think I can help you, and this is how I think I can help you. Please verify, validate that I can help you, because if I can, then we should talk about my need for resources to make that happen. If I'm wrong on that, if I can't be of any help, then it's a mismatch. And the time expended in setting up and conducting that first communication is going to have to be written off as a bad use of time and money. And then we have to go to the next person on our list and work our way downward to those who hopefully will at some point will find a match. So it's there's been some interesting surprises along the way. I generally don't like the surprises. I like to have my prior work, my prep work, put me in the right place at the right time. So I pretty much know how a conversation is going to go.
Yeah, that's fascinating because I guess due diligence starts right at the beginning on your part to decide who do you want to accept as a client first and then represent them. Second part is who do you want to focus on as a potential investment partner to make sure they're in the right ballpark. And also, opportunities are presented in areas that are a little deficient in one's due diligence because maybe the investment group is really strong. We talked about that before. If someone's into, let's say, national expansion, and someone has access to real estate networks and opportunities for better lease rates or better partners, that would put a premium on those investment groups because of their wherewithal and knowledge base that could complement and support a investment in that. And I guess to your point, you don't want to be the one that gets surprised at the same time as the investment group, right? Because you put all this time in, thought you had a good pairing, and then you found out in a sense that you've been kind of not had full benefit of the knowledge of the company you represented. So, nothing is 100%. There are no absolutes. Without risk, there's no reward. There's always the question of why not, or what's going to make this not become a good investment, even if everything is set up initially. And I guess that's the ability to read people properly and understand what they're meaning, not just what they're saying, and what's a high priority item, where some things you're always going to get a little bit of thorn in whatever there is out there, especially depending on the size of the business and the stage of the business. So if it's a startup, naturally, you're going to have a lot more unknowns. If it's a really strong, solid business that has a great track record, then it's a lot easier because then you can rely on references, history, how well do they pay their bills? How well do they honor their commitments? And I think that goes a long way too. Let's go to the audience. We've got a LinkedIn user, which I looked up, and it's Jason Gerardo, who's with us every other Wednesday with another wonderful individual in our cohort group, Dave Snell. And both of them work diligently to help people in life transitions, primarily military to civilian. So thank you, Jason. Always glad to have you in the audience. Always glad to have you on the show. Dennis comes back with agree, be relevant to help yours and others' development. Thanks for sharing and caring your great information to so many people in so many nations. Well, that's so generous of you, Dennis. And you've sat in the audience almost every day for the longest period of time and still come up with some great comments and show a significant interest in pretty much every show and every guest. Dennis then follows up with good prep works, help you find a match that won't burn, but will help you earn. That's a wonderful point, Dennis, because I think someone like Carl or someone who's very experienced will add insight and value to someone who doesn't have that experience. Because when someone's just even doing like an SBA loan, that in itself is daunting for someone who's never filled out the application. I know early when I started my business, I depended on SBA loans to get me by. and most of it was kind of asset based. So there had to be collateral, but the government would step in and make it less risky for a bank to put some of their money in. And I think you need a foothold, right? So a lot of times you need to get a relationship going, have to prove that relationship out. And then it's easier to go to the next level of financing, again, based on performance, based on how you use the money, how you plan to continue to use the money. And also, I think another key element is the ability to be very responsive to who you're working with. So if the information isn't 100%, as long as when someone calls you, you get back to them as soon as you can, right? Because people don't want to wait on people. And, all of a sudden, confusion, concern starts showing up when, someone's avoiding somebody, or someone says, I just acquired the financing, forget about them, right? Because you can't forget about them. They won't let you, and they won't forget about you. And you're going to hit some hard times that you're going to have to, either renegotiate or get some softer terms in areas. And I think a lot of it is, are you dealing with issues beyond your control? If a tornado comes by and does something and puts you out of business for a month, well, that's what tornadoes do, and you have no control over it. But you do need some accommodation. And I think on the other side, one has to show that you can step up to the plate, because you don't want to make it an all or nothing, especially when it's an ongoing business. And I think there's always that concern that, hey, there's a lot of people working here, serving a lot of different masters. How do we keep you in the game? How do you make you better? How do you make you stronger? And again, it depends on term of relationship, type of financing, if it's debt, if it's equity, if it's short term, long term. So it's very interesting. And it takes someone who really knows the lay of the land to know how to make those pivots, make those requests. And I think due diligence at the beginning is the foundation. So, Carl, what gets you excited still after all these years to keep jumping into the game and seeing what a player you can be for others?
Um, well, there's a lot of things. I like doing things that have never been done before. I can't quite figure out why. Coming up with a solution to a funding challenge when nobody else seems to be able to do that just makes a little more skip in my step as I go forward. And I'm right now have been invited to be part of a team to create a new funding model for community revitalization. And we're kind of having to recognize that all the approaches in the past have been too narrow, too unfocused, don't bring in enough external capital to the community. So we're asking ourselves, how would you do this differently? And we're currently building upon a model that another group created, and trying to make sure that it matches up, because we have two audiences. We have the community itself, who will be both beneficiaries, but hopefully also investors in the project, so that most of the profits from the project stays home in that community. But that's never going to get the job done. So then we have to go out and find some outside group, which by definition is, why should they care? They don't live there. This isn't their neighborhood. And so there's got to be some outcome within this community project that there's an affinity with. So we're going to go through a very extensive profiling, mapping type of due diligence of the world to say who in the world cares about this particular community at this time. And it may be that they don't care so much about the community as they may care about that this model, once created, might be implemented in their own backyard. And so they may be more concerned with the tool, the funding model, than they are the community itself. And if that's enough incentive for them to put money into this campaign, then that we want to talk to them.
Well, that's fascinating because when one looks at the world today, it's far different than it was 30, 40 years ago. I know growing up in Detroit, everybody's primary focus was the auto industry because Detroit was so dependent on it that when UAW went on strike, it affected a lot of people's spending power and the ability to invest in things. I know today with rising interest rates, money is getting more expensive. So it's harder to come by. It's not as loose as it was. At the same time, when something goes up, there's another thing that probably goes down. So they don't work the same way. So if you got quality cash flow, if you're able to self finance a lot, you're in a better position than if you're capital intensive or money intensive to get something off the ground, and you're going to pay a higher price the more you borrow or raise. And I guess it's knowing who's who and what they're into. Also, on the other side, it's valuation, right? So some people are not going to provide the return and opportunity as other individuals. And then one has to weigh the risk against return. So if you can get 10 times your investment, but you're putting yourself at higher risk versus 2 or 3 times, but it's pretty comfortable and secure. I guess that's where the smart people come in, who can
Pull
kind of
that curtain.
yeah, who can kind of cut the mustard in a way where they just say, hey, we're comfortable where we're at. We know why we're investing in these industries or in these groups. And also, what is a compensating factor? Because if you got a really strong operator, and have a lot of confidence in their background experience, they've been able to turn around 3 different companies and do this and that, that lends itself to more due diligence as far as belief and confidence in it. And I guess that's a matter of how do you position oneself to make the story that, hey, this person is brand new to this, but based on this, I think it's justified, or this business is a little challenging, but we've got this great operator who just we recruited who can take over. Maybe it's an old business that needs to get out a legacy and move forward. And I also think the belief is, what are you doing special? What's going to distinguish you and differentiate you and really put you in a quality defensive position that says, if this doesn't work and that doesn't work, well, this is our next approach to it. And then how do you measure your metrics? Do you wait 90 days to see what happened? Do you get reports every week based on sales or growth? I guess it depends on the strategy or the position of a company. So it's not, like it used to be. Some ways it's a lot better. I know in the past there was a lot of handshakes and personal relationships, even at the banking level. If you knew the loan officer and they knew you and for some reason believed you were a quality person and of high ethics, that may make a difference. Today it seems like people just go through an algorithm, right, and come out with a plus or come out with a minus, and there's nobody to talk to, no one who really cares. I guess, when you're dealing with large numbers and diverse groups, maybe you don't have the time and attention to really get into the weeds and figure it out. Dennis sure has come up with some new ideas here. It's great to get shares all these years with your great shares and cares, absolutely. And then agree, stay in the know, but not in the know. Still works and keeps us on the positive go. Thanks for your great Measure Up show. Thank you, Dennis. And I think that's important too. Are you positive? Are you convincing when you talk? Are you talking with authority? Because if you're kind of squeamish and wimpish, that kind of shows because everybody knows there's going to be a storm and everybody knows that you're going to have to weather that storm. Do you have the fortification in yourself? And also, I believe no man's an island. Who's your other group? Because I know a question that always comes up is what happens when you get hit by a bus, right? If you're the all knowing and all doing, that just means either we're going to have to find somebody like you quick, or we're going to have to step in and be you. And the last thing anybody wants to do is be more than they ever wanted to be or had stated they would be. So I guess Carl made a really good point early on is you got to put yourself in the shoes of the other party. It's not about what's only good for you because it's not going to be good for you if it's not good for them. And it's also not going to be a positive experience. So getting away from, will I make a lot or lose everything? Is this 1 or 2 or 3 year investment in my time going to make me happier for being part of this, make me prouder for putting this in my portfolio? And I believe in most cases, you're one of many, right? I don't think an investment group just decides we're going to invest in one company and that's it and ride with it. Usually they're going to have 7, 8, 10 different investments. They're also going to start placing their time and attention where it can pay the best off for all parties. And it's easy to get lost and not be in the radar anymore. That, hey, this is just, a waste of time. We'll still support it the best we can, but we're not going to get behind it because ultimately, and that's another key thing, is you want an investment group that can continue to invest in you, right? If you start with a group that only has certain at a certain point will exit earlier, will not bring other players in, or will not stick around. Now you got to go through that whole thing, and now you got to figure out, now we got this group, and how much value are they bringing? So I guess it's all reciprocal in time. Is what is the value? How do you quantify and qualify it? How do you look at this diverse situation?
It gets down to personalization and customization to a large extent. You want to fit a square peg in a square hole. You want the hole to be the same size as the peg. You don't want a huge cavern with a small peg. And we could go through all these different metaphors, but the thing is that due diligence is intended to support the establishment of a relationship of which the investment is part of that relationship. And it may be the only reason, but that's generally a weak relationship because it only has one nexus or one point of contact. And you'll see investors go, well, yeah, I could invest in this business or this business. I have 2 choices, but I happen to know that industry, or I can introduce them to somebody in the industry they're in, and that's going to help my investment go forward. And this becomes an element in the decision process of which business they're going to choose. And again, understanding that in starting the conversation is like, yeah, if we do this together, I think you can help me a lot by simply calling Joe and asking Joe to get involved here. Well, that's not an expensive thing, and it adds to their investment. It's going to hopefully create a greater yield to them on the investment. And these are all the many, many, many things that can come up during the conversation. But I was laughing when you were talking about in the old days. Because I grew up in eastern Kansas, and there were people there who still believe that in the flat Earth approach to the planet, and your entire community ended pretty much at the county line, unless you have a cousin who moved to the city or moved away or something. Then it might be a little bit larger, but you're pretty much limited in geographic area to the number of people that were there and their level of wealth, and it became a very, very, very small group of people to talk to. Whereas today, your community can be anywhere in the world. It can all be linked together digitally. My newsletter, which I publish every day, my instant funding newsletter, is somewhere around 780 different subscribers from around the world that get to hear me every day talk about doing something I've learned about raising funding. I'm doing my show tomorrow, my LinkedIn Live show with Dave Snell. He's my guest tomorrow, and we're going to be talking about forensics accounting, which on its face doesn't sound like anything to do with due diligence, but it does. Because when you're trying to create a set of digital records, it's important to do that so that you do have a record, but it's also important that nothing's going to break, hack, or take apart that record. So it's both a prevent defense, so to speak, where I'm going, yes, I'm going to create the records I need for my own operations, but I also want them protected against anybody who decides they want to mess with them. And how do I do that? And if I'm doing due diligence on a business, one of the common questions these days is, what if you get hacked? And if there isn't, as you described it, a clear, concise, crisp response to that, and then I'm going like, well, if I get hacked, then my investment's dead. I don't want to put all my money in that bucket and see it all disappear some night because a high school kid or a foreign national decided that wouldn't it be great to empty their bank account or screw up their website or dump a bunch of false information into their data records so you can't tell what's real from what's false. So having worked with lots and lots of businesses, I see a lot of threats where most people wouldn't see them because they just have been blessed enough not to have encountered these problems. And as like you say, if somebody gets hit by a bus, and I have several stories that fall in that category, waiting till after the bus hits them is too late. We talk about, and I do a lot of work where we're doing, first off, early technologies that nobody really understands. And if your lead engineer gets hit by that bus, that project's over. So the first thing we do when we get engaged in that project is we find a young grad student and we have them do a Vulcan mind meld with the engineer and suck all the information out, which is helpful both to have what we call a human backup, but it also may help us better understand what the engineer is trying to tell us, because a lot of times we're in a constant translation challenge. What did you mean by that? When you said it could jump this high, did you mean you jumping or me jumping? So due diligence is just as you called it. It's a communication. It's a reciprocal exchange of information. It has a purpose, which is to allow both sides in a potential or existing relationship to learn more about each other, and both to determine if there is an initial fit, but also to maintain that fit over time as markets shift or other things change, or a need to shift to a plan B because something happened that wasn't considered likely, but it happened anyway. So we all saw where tornadoes raged across Iowa and Oklahoma and other states over the last week. Well, if your business happened to be in the path of one of those tornadoes, this week's not going to look like last week. And what are your investors asking you the question, if they can get a hold of you, to ask the question like, where are we at? Are we out of business? Are we simply temporarily limited? Do you have insurance? Do you have backups on your data? All these questions that may come into play suddenly that are low probability of happening, but when they happen immensely. So.
I'm sorry to interrupt, but that really opens up one's thought process to outsource where that's not your core competency. And as example, early on, I partnered with Amazon Web Services, AWS. And because they did have that security, they did have that redundancy, they did have that protection where you could pretty much depend on that. And if you said, hey, I'm with AWS, well, the question is AWS a quality company that knows what they're doing versus, well, I just got Doug who just graduated school and he's going to continue to safeguard our information and be on the alert for all these attacks. I mean, in business, we were getting attacked every couple minutes. And I mean, it wasn't like a one-time deal, but what was interesting is AWS, which is huge, had a facility in Memphis and it got hit by a tornado and got knocked out. And until they could, again, what they would do is they would move clients to another center and take over. But there was a lag or something else. And, you know, if you're depending on being up and running, because it's a bad look for someone to come to your website, try to order something, and it says we're not up and running, you know, that's not positive. So I think focusing on core competency, not trying to be everything to everybody, learning how to outsource to players that are significant, that gain confidence, because a lot of times people will say, well, who are you? Well, I'm partners with Microsoft, I'm partners with Amazon, I'm partners with them. All these partners collectively are significant, right? So they're a part of us, we're a part of them, but here's what we do that nobody else does. And here's how we don't have to staff up. Because what I also found is fixed expenses are the worst thing you can have, right? So if you're having a lot of leases that can't be really broken easily, if you have a lot of people who are on contract or salary that you can't just eliminate without a, let's say, a severance package, you can't be as flexible. A lot of times you're kind of anchored because of whatever relationships you created. And you want to be able to change with the times and have a lean, mean team, as opposed to, well, we got somebody doing here and somebody doing there, and then someone's got to supervise them, and we got to watch out for the supervisors. And pretty soon you create some clown show versus, hey, this is what we need and it's essential. And I think the other question people ask is, how do you respond? How do you change? How fast do you change with information? And I think that keeps you out of a lot of trouble a lot longer than most people want to see you do that. And it's really being resourceful, but also staying on the cutting edge, you know, always investigating. You know, a lot of people don't invest enough in conferences or in collaboration groups or learning from other people's experience, especially if they're in the same industry doing pretty much the same thing. And what I found is you can get so much more by sharing with competitors than fighting them. You know, and again, that depends on who the competitor is, at what level are you sharing, what's important to you, what's important to them, and is something good coming out of it. And if you have more resources, again, it takes you away from what happens if you get hit by a bus, because some of these relationships will still stand with you and may even be the benefit. So how do you see fortifying a business, making it as strong as possible, and bringing value that they might not have identified for themselves as soon as you can?
Well, there's several ways to look at yourself as a small business to make yourself appear bigger, stronger, bolder than you would otherwise. I did a series last week in my newsletter where I talked about increasing your credibility, increasing impact, building the size of your team. All these things serve to help you ultimately stand out. Because you're kind of in a dilemma where everybody wants you to look normal, okay, because they feels more comfortable investing in something that's normal. But the more normal you are, the less you are distinguished from everybody else. So then you have to turn around and do something that stands out. And how you do that can make you look abnormal and cause people to go, well, that's too weird. I don't know what they're talking about, something to run away. So it's a delicate dance as you tell your story within any type of raising capital. Of you want to be able to get something they understand, they can see how they can benefit from association or investment, what you're doing, but they're never going to pick you over everyone else unless you're doing those things that make you superior. You're doing it better, more efficiently. You're doing it in a style that they like. It could be dozens of different reasons. And that's why matching is so hard, because there are these dozens of reasons why you may get picked over a different person or a different thing clamoring for the same funding. And your due diligence basically helps you try to identify those who you think are going to match because you're doing something they do care about. And again, like getting hit by the bus, waiting till you get hit by the bus to start developing relationships and doing due diligence on investor candidates is way too late. You want to build your relationships always continuously. You're looking for all the things you have in common with all the subgroups or subcommunities. And I'm still trying to identify all the groups and why we have something in common, so that I can maintain the relationship. I can continue to contribute and support that relationship. So to speak, when the fire bell does ring, I know that the volunteer fire department is going to come help me with my fundraising campaign. And I know there should be enough of them, and they're going to care enough to help me make it all happen. But that only happens because I've been doing due diligence all the time. I'm trying to build and maintain relationships. And I look at it, of course, with my experience at several layers of depth beyond what an average person would want to or care to do it. And that means also that I have to surround myself also with other experts, people on HR, people on buying and selling businesses, different types of funding vehicles, so that I don't have to know everything, because I can't. But if I can build a team quickly and assemble it as that volunteer fire department comes together for a funding, then I know I've got somebody with a ladder and somebody with a bucket and somebody knows how to hook up the hose to the hydrant on my team, so that we've got everybody we need to get the job done.
Yeah, you make some really good points there. And what comes to mind is what distinguishes and differentiates you. And having LinkedIn a proficiency by itself is a competitive advantage over somebody else. So if Carl says, well, by the way, I do a daily newsletter that has worldwide reach and value, I'm also doing a live stream show that builds my credibility, my amplified reach, my relevancy, and I can help you with that also, and maybe help you be a lot more of what you admired in me. So just having LinkedIn and doing it well will be better than somebody who doesn't. Having a live stream where people can start to see who you are naturally over time, when they knew you didn't know them and weren't pitching them. But this is your thought leadership. This is what you come up with. So it really brings a lot of depth to someone who maybe just superficially wouldn't look as strong on paper, but with some added quality attributes and competencies, it shows that, hey, I can reach certain people, or I actually have certain people, like our group with Dave Snell, our group with Con. I know I talked with Kelly, and Con shared a couple referrals with her. And it's just people getting to know people, trusting people, liking people. And when people refer somebody that they know has quality, they're doing the three parties a favor: themselves, the person they're referring, and the person they're referring to, which then says, hey, there's something that, that saying, proof is in the pudding. when you continue to put out value and people see and identify it, they don't need as much due diligence the second time around, right? Because they've already done it on you, they've already experienced you, and we're beyond that now. Now it's like, okay, you passed the litmus test on person of integrity, a person who's a good person to be and work with. What else do you have? And probably a lot of investment groups like going back to the well where they got the best water out of with the person, or at least it's like, hey, Carl suggested this. We love Carl, right? So Carl's going to go in there with a headwind versus, I don't know this guy, looks like a good guy. That's not a big driving, motivating factor to say, let's do something. And some people, once they just say it, okay, we're going to, it's almost like they gave their blessing that whatever he wants, it's okay, because I know him, I trust him. I know they wouldn't bring anything but the best with us. And I also know they're going to take responsibility and accountability, right? So it's not just them and us, it's them and us and their client. And they'll be able to share things that we say with their client, maybe translate it in a better way, put it in a way that doesn't sound too intimidating or threatening or challenging. And it's the knowledge of these elements that you want to go and to Dennis's point, it's teamwork still works, helping us to do due diligence. I like your play on DUE versus do. Agree having partners an important part of pairing and sharing success helps avoid a lonely mess. Agree normal is an important setting. Agree don't X your experts. And I think everybody has to have somewhat of a generous spirit, have a little more patience, a little more tolerance, get a little bit more understanding before judgment shows up, because a bad judgment will start, again, that reciprocal process that will back people off, make people feel a little threatened. And that's not a comfortable level to put anybody in. And the other part is being the better person, being the better business player, and not getting caught in the minors, not worrying about the little things, not taking things personally, and then rising to the occasion. Is when it's sunny out there, everybody loves the beach. It's only when it starts drizzling, that there's not the hardy people who stick around waiting for the sun to come up. And you don't want people, there's people who are great on the upside, but just awful on the downside. As long as everything's going great and the wind's at their back, they're perfect. But all of a sudden they face with challenges. And I think, how does someone become more humble? How does someone take it more directly to heart that says, even though I'm not signed up for this, I'm going to take care of this, and I'm going to do more than it's expected. And I think when we're talking about due diligence, we're usually talking about projections. And I think that's a big element, is how rosy a picture are you sharing? Is it the best case, or is it the best, middle, and maybe even worst case that shows you have a knowledge of the playing field you're on and what could possibly happen? So I know we're almost at the end, Carl. We covered a lot of ground. Hopefully, if anybody was interested in due diligence, we gave them a pretty good tour. And maybe that'll give them more reason to go forward, or at least understand, hey, I didn't understand this as well. I need somebody like Carl to kind of put me through what's expected. And I think those early conversations, like you mentioned, how you pick an investment group is important, not to waste your time. How to make sure the person, the potential client, is going in with their eyes wide open and knows that, hey, if you don't have this, maybe it's a good time to get this and let's talk again. Or the issues we're talking about are going to be fundamental issues with anybody you're talking to. So if there's a severe deficiency, that's something only you can kind of get into and figure out and make it easier on everybody. So, final words, Carl?
Yeah, no, it's been interesting to work with you and to use LinkedIn as a tool for so many different reasons. I did a quick Google of myself over the weekend, which is kind of a self-analytics, and half of the links that popped up were referencing something I'd done on LinkedIn. I posted a newsletter, posted an article, had a LinkedIn live show, and that basically makes you more visible and makes you stand out as you described it. But then going beyond that, the daily newsletter and the weekly shows are my way of demonstrating to my community that I support them, and it gives me the efficiency to give them some value by spreading it out in a way that I can digitally amplify. So instead of a one-on-one meeting where I share something I learned, a lesson, I can post it in my newsletter, and now I know it's going to 780 some people, and that as that continues to grow, I'm going to have greater and greater impact. But I'm also demonstrating that I care about my community. I'm trying to help my community, and that builds my credibility, in addition to making me easier to find and easier to pick if somebody's looking for someone with my background and experience.
Well, that's terrific. And you do make a good point because Google does index every one of your newsletters. They don't do that with every post. So every time you do a newsletter, Google picks that up. And, when I started LinkedIn, Donald Cohen is a very popular name. I'd say there's probably 20 some thousand of me out there. I'm number one in Don and Donald Cohen because of LinkedIn, because of the continuous content. And the other thing that comes to mind, and we'll close, is a show like this about due diligence would be a great link to someone who says, well, how do you do due diligence, or what's your thoughts? It'd be great to say, well, here's a show all about it, right? And why don't you watch it if you have the time and interest? And here's another show on valuation. So eventually you can create specific shows that will then be a marketing tool for you or an informational resource for someone else to say, I'd love to talk to you, but if you like, here's 6 shows and here's every area that I pride myself in. And it's an hour show with Don or with Dave Snell on forensics. And I think most people may not read it, but they'll say, wow, it's there, right? And they did it. And I can always use that as a resource. So there's competitive advantages, but there's also professional advantages from the conversation, because I know I'm so much better for all the times I've been on the show with Carl and Kelly and all these other people who their focus is a little different than mine, but I get a chance to engage and walk into their world and come away with some things that are universally applied. With that said, I want to thank everybody so much. Tomorrow, I'll just share with you, we have Beverly Glazer with us and Dr. Deborah Dupree. On Wednesday, we have Carl back with Con. Everybody knows Con, a wonderful gentleman. And then on Thursday, we've got Kelly and myself. Very much looking forward to that. So everybody, it's Monday. Have a wonderful week ahead. Hopefully we provided you with some food for thought and maybe opportunity for action. So with that, thank you, Carl. Thank you, audience. See you in 23 hours if you can. And we'll talk again. Don't forget Carl's show tomorrow, 10 a.m. Eastern. If you don't know where to find it, just go to Carl's profile. As soon as it starts, it'll show up on his background. You can engage there just like anybody's live stream. Tomorrow also, we've got Harvey following the show and Kelly with Awesome Journey and Christy Howard following his show. So a foursome. With that said, take care. Really enjoyed everything today, and everybody take care.